All right, guys, before I get started, just want to make sure you do see my disclosure statement. Want to make sure that you do understand that I am not a financial advisor. I am just an educator, and anything that I do is for educational purposes only. So therefore, if you decide to take upon anything that I am talking about here today, please do make sure that you consult with your own financial advisor so they can help you to understand and know all the relevant risk factors associated with trading and investing in cryptocurrencies. All right, guys, so we got that out the way. Let's get right into this. But before we do, I want to always give you my word of encouragement. And today's word of encouragement comes from John 15:12, a little short verse that says, "Love one another as I have loved you." All right, so that's John 15:12. So we are to love each other as Jesus loved us. And he loved us enough to give up his life for us. We may or may not have to die for someone, but we can also practice sacrificial love in other ways, such as listening, helping, encouraging, giving. Think of someone who needs this kind of love today and give all the love that you can give to them. Amen. All right, guys, we are ready to get going. Take a look at this list right here, my cryptocurrency list. That's what we're supposed to be going over today. I don't think we're going to get all those, okay? Because what the deal is people give me assets that they want me to look at, and I put them on my list. And then when I come in here and look at this list today, it's like, you'll never get that. This will take me hours. But if you want to sit here for hours, cool. But I don't think I'll be doing that whole list, but we'll see. Basically, what we could do is if we'll go through the list, and if there's something that's not really much to talk about with that asset, we won't talk about it. So let's start this off with ADA. All right, ADA USD. Basically, this thing is in a downtrend right now, guys. You could see it's very bearish. And the thing about it also is that look at the angulation. So always look at angulation of clouds and then angulation of Tinkinson and Kijinson. Now look where you have Chiku span. It's inside this price. So it's kind of like a ranging market. I mean, it's kind of like the market is ranging in this area. Now look at this. From this low to this low, we're going to go here. Look at this divergence. So you could see the cumulative volume was moving to the upside, and this was moving to the downside. So then we pushed up higher. I think this push up here, we pushed up to Kijinson here. Kijinson is where where we see the bounce and the market drop. I don't know if we violate this low again, all right, because of the cumulative volume. But also, I see good angulation, so I think we could continue to move. But the only issue with me for this is, let's open this up a little bit. The cloud's not really thick, so we still have some angulation. I think that we'll probably see more downside. So what the main thing you want to look for is, I think you should be careful until you see this. You want to see price break out of this zone right here. Whoops, not that zone. This zone right here. Because you're inside the TK zone and you're trading inside of one candle, really. And if you don't break outside of this candle to the downside, then you're probably going to break the upside. You'll see more upside movement here. At that point, it'll be a 1, 2, 3 reversal, because what we're in right now is a 1, 2, 3 continuation. It could turn into a 1, 2, 3 reversal. Let me explain it to you. So when we talk about Ichimoku, we talk about wave structure, wave pattern, and we look at the market. I'm going to just draw these waves out to let you see. So all throughout Ichimoku, I'm going to go with this wave. We do N waves here, right? So you see N waves. And then when you get out of an N wave, you get in more like of a P wave formation. All right, so this would be like a P wave formation. This is the N wave formation. Then the market breaks the P wave, pushes up, comes back down, pushes up, down. So now you're back in that N wave formation. All right, and then we get in here, we start to get another P wave formation. Market breaks here, then the market pushes higher, pushes down, pushes higher. We expect to push down, because that would keep this structure to the downside, right? And you would continue this N wave structure to the downside. Fluctuation patterns are these S waves right here. So this is your S wave fluctuation. And we could have probably seen a little S wave in here and then we broke to the upside, right? But that was a smaller P wave, sorry. This is a P wave right here. This was a small P wave area. And then this was another P wave. A lot of times you'll see a P wave at the bottom and then the market moves higher. So it'll come down to this level and then move higher. And that's what happened here. But then we found resistance at Kijinsen. So let me take that off. So based off everything that I'm showing you with the wave structure, that's Ichimoku. That's going to be basically your Ichimoku wave analysis, part of it. So the only thing that we're looking at now is do we have a continuation wave? So a continuation wave would be if we had an N wave that goes to the downside. So I think we started that, but I think we could call ourselves between the N wave to the downside or a possible 1, 2, 3 reversal. And let me explain that real quick. And this is why you want to be careful. You want to make sure you get a close outside of this zone here. So that zone also is going to be this. Let me explain this. So when I see this stuff, like I could sit here and just go over so many things that I see, but I'll be here forever with some stuff. And I can't do that. But basically what we're looking at here, right? This. So you got a TK zone also. So you want to be trading outside of that zone. Here's your zone. This is your Tenkan Kijinsen. Both of them are flat, so you have no momentum. And what's leading me to believe that we may see a little bit more upside is this flatness here, along with this divergence that we're seeing on the cumulative volume. You had a low here, and then you had a lower low, right? Low and then lower low. So you had a low, but then you had a higher low. That shows that there's demand coming into the market. Now that doesn't mean it's going to take over, but there's demand coming into the market. How much are we going to see? So for me, I want to see some violations broken, some levels violated, and those levels would be this zone, this TK zone. If you trade outside of it, you're moving back to the downside. But then we need to break this level. So let me explain this area real quick. I always look at the wave structure. I don't need Ichimoku on the chart to do this, but this is the I wave. And then this is the V wave. And then from this point, so here to here is the I wave. From here to here is the I wave, 2 I waves creating a V wave. And then the third I wave would make the N pattern that we see the whole market move through. That's what we're thinking the market could do. But my issue here now is this. Here's the one. This is the continuation wave. This is the N wave. But here's the reversal wave. A 1, 2, 3 reversal. 1, 2. If we fail to go lower, and if we fail to break this low right here, all right. So let me break this. If we fail to break this low, and I think like if we can't get outside of this candle really, but you're gonna see 1, 2, 3, and then an N wave to the upside. But that doesn't mean you have full-blown trend reversal. That just means you're still moving to the upside. You're gonna get past Kijinsen. You could move up into the resistance zone. All right, and this is the resistance zone, which is your cloud. Okay, but to break real structure and to see this thing really take off, I think you need to really get past this level right now. That's the main thing right now, to get past that point in order to see this thing really move to the upside even more. But it could become like this. All right, so if we see this, if we don't break this level, then we may get some kind of a P wave and then a break to the upside maybe. But if we can break through this low here, then we want to see if we can break through this low here. So I would trade, if I'm trading, I would trade the break outside of the TK zone. All right, and then I would trade down to this area, to this zone, and then I would see if we can break that level, because if we can, we're going here. So basically where we are now, I can't give you a definite, but those things that we see, if those happen, then that's what you're going to look for. And here's where your targets are. I'm not going to write every target on the chart because I'll be here all day again. But I'm going to show you the targets. And I told you how to find your targets. So you're going to use this, your fib extension tool. All right. So you're going to use your trend-based fib extension tool. You're going to go 1, 2, 3. If we're continuing to the downside, we're going to see the market push to these levels here. So you always got to get through this 2 level, which is this low here. All right, the 2 is the bottom of the I wave, the start of the V wave. That's always going to be your 2 level, okay? And then your 1-to-1 ratio right here is your N wave, is the completion of that N wave. But this is your N target. So let me explain that. N wave and N target are not the same things. This is an N wave, and this is an N target. This would be, let's say, let me clear that because I'm going to move up. So when you hear me say N wave and N target, don't get those confused. Let me measure this also to make sure this is correct, because I changed this. So this high to this low, and if I take that 1-to-1, that's right there. All right, so let's move that out. So 1-to-1 would be right here, 1-to-1 from this low, from high to low. So this leg is actually, let's do it again. This leg is actually like a 32.6. And then here's your move right here. So if we put this on the chart, 1, 2, 3. This is going to be the level for our N wave, our E wave. All right, this level right here. This is our E wave level. Not our E wave, sorry, our E target, our E value. This is going to be our N value. We're only concerned about the E and the N. So this is the N value. This is the 1-to-1 ratio value, which is a measured move. So that, what all this is telling us is where, if we're going to continue to the downside, this structure will continue. We'll break outside of this low. We'll continue down, and then we need to break this low, and then we'll continue to here, and then maybe to here. This would be my N. This would be my E. And then there's also going to be an NT, and I don't have those levels marked, and then a V, which is usually close to the N level. So since this is so close to the N level, I don't need the V, and since the NT is so close to this level right here, the 2, I don't need the NT, so I don't mark them on my chart, and I just look for the N and the E. All right, so that's where we are. Let me clear that off my chart. Let me get that back and get that off the chart. Let me take some stuff off real quick. So guys, that's the targets that we're going to be shooting for. Again, the main target we're going to shoot for is this 1-to-1 ratio at 84176. All right, that'll be the target you shoot for. But you need to get through this 1 level, this 2 level, which is going to be 1.03911. You need to get through that level. So if you break here, you need to get down to here, and then break that level and get down to this point. If you can't break and you move higher, then we're probably going to see we'll see the market push up into this cloud, maybe up to the flat level. Then we'll know more. So it all depends which way we break out of this little zone right here. And I think we're going to probably break to the downside. I could see angulation and so forth. All right. But yes, I do have divergence. And when I see that, we're probably searching for a low where we're going to might see the market change direction. Let's mark that low. So we could push back all the way down to this level. All right. And then we might find resistance there. And then we'll see this 1-to-1. We'll see this. I keep saying that. We'll see this divergence. And at a support and resistance level, I take heed to divergence. Other than that, I don't care about divergence. It can diverge all day long. But when it gets to a support and resistance level, then I take note of it. All right. So that's going to be ADA USD. Let's go to the atom bomb. I talked about this all week. Did 2 videos on this, but I think I'm going to show you my targets real quick. Let me mark these targets so I know where we're headed here. I think this one is higher. So that's going to be that. It's going to be your N wave. Your N target. And then your E target is going to be this level. All right, so your E target will be right here. Right at this level, 161.8, which is going to give you 64.030. All right, and then also your N level. So your N value, what's your N value is going to be right here. And this is going to be your E value. All right, and you need to get through this 2 level right here. So this is 1, 2, 3, and we're shooting for 4. We're saying 4 needs to get through 2, then it needs to get up to the N value, and that's where we would look to take profit. If it could violate that, we shoot for the E level. All right, so what I think about this asset right now, since we're using Ichimoku, I'm going to stick to the Ichimoku concepts basically. And we're bullish above the cloud. We got nothing to hinder us. Crossover is bullish. We had a C clamp here that got deep. All right. We had a little C clamp, wasn't big. And when you flattened out with Tinkinson and Keatonson, the market flattened out. And that's what you see happening now. So I told you we always need to get through this 2 level. If you don't get through that 2 level, then that's where you start to see fluctuation. This is the 2 level. And then that's where you start to see possible P waves develop. All right. But I'm not saying we're at that point yet. We just need to see what's going to happen now. So we could still quite possibly go 1, 2, 3, and then continue this move to the upside. Looks like we're topping here though. So then we would be looking at a small reversal starting to develop. And that reversal would be like this. 1, 2, actually, sorry, I'm wrong. 2, 3, and 4 would take us back to the upside. So we still have this move to the upside. We haven't violated these fractals. And until you violate these fractals, that's what the deal is. You're good to the upside. So until you violate these fractal lows, this bear fractals, you continue with the upside move and don't trade against it. Because what happens right now, you're breaking these bull fractals. And then you're looking to come back to those bull fractals. So we already talked about this trade setup a couple days now, but we figured that the market would pull back to this level. All right, and then we marked this double because we looked at this fractal over here. So we marked it just like this. And that's where the market pulled back into. We were up here when we thought about it, and we figured the market could pull down here. Actually, we were pushing closer to this level. But we realized we could come down to here, and you got the Keatonson for support. Then we would think we thought the market would move higher. We started to develop some momentum, but we seem to have lost it. So if we've lost that momentum, long as we don't violate this low here, we're good to go. We're going to still see the market possibly move to the upside. But you may start to form a P wave. All right. But if you can break this high, we're shooting for this level at 51.967. If you can't break that, then you see the market violate this level. Then we're shooting down to the downside, because then we'll have a full-blown N wave to the downside. All right. Hopefully this helped you out, but let's move on. AVAX USD. I think this is my first time looking at this one. But actually, guys, we're bearish. We're breaking bear fractals. So currently at this point, if you really look at it, you're breaking bear fractals. So this was a high, then you made another high, then a lower high. And you're currently violating these low fractals, these bear fractals. So we're thinking the market should see that violate this level. So we should still see a bearish market. And let me show you the formation it's moving in. So we're talking about this N wave. 1, 2, 3, 4. That was the completion of the N wave. So we started from this high. Let's go to the next high. So 1, 2, 3, and then we're shooting for 4. Where's 4 going to be? So had I looked at this last week, I would have told you some levels to look to trade this, and we should be looking to short this now at this point. We should be looking to go to the downside, because we should have been looking at trading this at this level right here. And I would make this into a zone. So we didn't quite get back to that level, that zone. And also I want to see what's happening here. Are we going to have any divergence? Because it doesn't look like it. So from this low to this low, there's not going to be any divergence if we violate. So when we get down to this point, let's see if what we have. But got a bearish crossover, angulation to the downside. I don't see any strength to the upside right now. I'm serious. I see no strength to the upside. So we already have that formation I told you, which is this N wave here. And let's see what the target was. All right. So if we were able to trade here short, we look for this target. Let's see if our targets would have matched up with this. So our targets would have go here. We go 1, 2, 3. See that 1-to-1 ratio right there? That's what we shoot for that N wave. And this violated the 1-to-1 ratio, went lower. So that's the level that you're usually going to look to hit the market with, that level, that 1-to-1 ratio. Now let's see where this target is now, because we're 1, 2, 3. So let me explain this real quick if I can. The N wave has 4 points on it. 1, 2, 3, and then 4 is what we're looking for, because we already see these 3. We always trade at 3. We never trade at 2. All right. And then we start our count from 1, right? So we never trade at 2, try to trade at 3, and then you start your count at 1, and you're shooting for 4. So let's go backwards. We did that there, and I showed you where the N wave was and where we came and what target was. So now let's add this, because see, we could trade this breakout here to the downside. You consolidate, and if we can trade the breakout to the downside, then we're going to see where the target could be. So let's see where that target could be. Based off of Ichimoku observation theory, we would be shooting for the 1-to-1 ratio, which is going to be your N wave, not your N wave, sorry. Remember, don't get the wave and the target confused. This is the N target, N value, which would be 58.0203549. And then this would be my E value. So let me mark that. Get rid of that. Oh, I'm sorry. I didn't want to do that. I wanted to get rid of that. So let's move this back. Then look at that value. All right. So therefore, our target, our E value is going to be way down here at about 33.24. That's if we can violate this N value. All right. That's what we're going to shoot. The first thing you're going to shoot for is this red line here at 78.87.3. Because you need to get through that 2 level. And then after that, you're going to shoot for this level at 57.5766. All right. So that would be your next level. So let's move on. BCH USD. Try to get through all these pairs. All right. This isn't an N wave to the downside. It is a good wave. I don't like marking these extra legs. So I'm not going to mark that, because we went from here to here to here. So we just missed the N. Well, sorry, that's not the N value. The N value is down here. This is where the N value target is. But we can change that target because we got a smaller wave. And let me show you what I'm talking about. Everything on Ichimoku is bearish. Now this cloud is starting to get too thick for me, but we still have angulation on span A. So we must be getting near some support and resistance. Let's mark this. We just violated that, so let's go down here. We're near this area here. What else does that line up with? Yep, we're getting near a support level. And we do have divergence. Look at that. So, yep, this is what the deal is. There's the divergence. You can see this to the downside. Now, if we mark this leg, we're still diverged. All right, because we're aiming to the upside. So I think what we may see here is this. We could push down to this level. All right, we could still push down. We don't have distance on Tingis and Gietzensen, but we do have a cloud that's getting super thick. Thick clouds define bottoms and tops. I'm not going to go into that right now. I already talked about that last video and the last video before that. But anyway, if you look at this cloud is getting too thick. When it gets too thick like this, but we still have angulation. That's the thing. So we could still see a drop. All right. And I think we could see a drop down to 33.67. We don't have a lot of We don't have a lot of distance between Tinkinson and Kijinsen. What I'm talking about is this. That's Kijinsen. Here's Tinkinson. When they get too far apart, then what happens is the market's going to pull back. All right, you're going to see the market move back. All right. So at this point, and we still have span A aiming to the downside, span B flattened out a little bit. When this gets too thick, also, this defines a bottom. And then we'll see the market move higher. So what I would be looking at right now is this, guys. This low here. Let me mark this other low. Just want to mark this low right here. See if this, so this is our zone, our support zone. I think we push back to this level, close to this area. But once we break Kijinsen, look for the move to the upside. You'll have a full-blown new wave to the downside. Let's mark this new wave. See where this target could go if we're going to violate. We would have to go 1, 2. Let's say that's the top. Then we would be shooting for this target down here at 26.62. I mean 264.62. That would be our end value. All right, that would be our end value right here. That's what we would have here. And that's what we would shoot for if we can break this 2 level. This is your 2. And then we'll see the market get down into this area. All right. But if not, if we can't violate this 2, we're pushing back up. If we break Kijinsen, then we can start to look where the targets are for the upside. Doesn't say we're going in a full-blown upside trend. It just says the market is now moving that way on a smaller time frame. Okay. Let me delete that. Let's go to BTC USD. So BTC USD, I had talked about this. I put a video out on this the other day. Let me show you what I'm looking at. I figured the market was here. And people I figured were getting excited because they thought BTC USD was going to get moving now. But no, I didn't think it was going to get moving. But I did think it could move up into this zone that I have on the chart. But instead it fell down. Now when it fell down here, that's good. Because we possibly going to be able to get a trade to the upside, maybe. I'm not sure if we're moving to the upside or if we're going to violate this low here. So when we push back into our zone, this is our zone because we have support here. See that resistance there, support here. This is a strong level. We rejected this level hard previously. So I'm looking if we get back here, if we have divergence. So if we do push to this level and we keep seeing like we are now, what we're showing is increased demand. If we keep seeing that increased demand, because we're seeing it right there, then I think if we get down into this area, we see this market push higher, at least to this level. And then I think we start to break major levels. All right, and then you start to see a little bit of a recover of Bitcoin. And you can start to be happy at that point, all right? So that's what I see happening, all right? And I think... yeah, I think you want to pay more attention to these levels right here, because I think this is where you're going to see something happen. So what's that, about 40? What do we got? 40740 and 42431, I believe that is. So this zone right here is what you want to pay attention to. See what the market does. If we stay in this zone, don't violate the low, and we keep creating... we keep seeing increasing in demand, then we're going to see a move to the upside. And at least to this level, if we come off of this bottom. And if we can violate that low, then we'll probably start shooting for that level and then shooting for the cloud. And if you break the cloud, there we go. Bye-bye. Touchdown. All right. So let's clear that and let's move on. All right. So let's look at BNB. We'll get to that right now. All right, guys. So looking at this, this Binance coin looks pretty nice. It's showing great structure. Now, there's a couple things that I am concerned about, but let me just show you the structure real first. I like to see the structure of the market. We could break it down into smaller waves or bigger waves. So I'm going to break it down to the bigger wave first. This is your N wave. All right, your N wave structure. So that's what we're thinking the market's going to do, something like that. So it would have to break this level. Let's take this stuff off. So we are in the middle of a V wave right now. So a V wave leads to a N wave more than likely. So that's where we are. And then we're thinking the market will drop like this. Problem is we got a flat cloud, a little bit of distance. There's not a lot of distance on Tinkins and Kijinsen. So I think we're going to see that drop. And also you have angulation on span A is angling to the downside. So as long as that's angling to the downside, we have no issues. What the worry comes is this gets thicker, farther apart, and then starts to roll up. If this stays flat, this keeps moving down a little bit, then rolls up. You got a big, thick distance cloud, and that means you found a bottom, and then the market's going to roll over, well, move up, and then you may see the crossover at that point. All right, and then you get a new cloud to the upside. But that's what I look for, and we're kind of in that phase right now because we do have a flat cloud with thickness, but we don't have a lot of distance between Kijinsen and Tinkinsen. But Tinkinsen's aiming to the downside, Kijinsen's flat. So therefore, we should see the market possibly drop. So if it's going to drop, it's going to stay with this structure here, which would be this N wave. So put this N wave back, this V wave, and now we're shooting for the 4 target. So we're going to see where this target is if the market's going to bounce off of Kijinsen, because this is a nice resistance level bouncing off of the Kijinsen. Also, the resistance levels you want to look at are this. So I'm not going to use the big fractal zone, but I'm going to use this fractal zone right here. Right there. So I usually look for the market to push up to these levels. I wouldn't use this one because it's big, a big distance. Let's see how far that. Yeah, that's a big distance there with that rejection. So we're looking at the market quite possibly moving down. We do have. See what kind of divergence we have. Do we have divergence? No. Well, actually, yes, because we're flat. We shouldn't even be flat. This should be lower. All right, so that's showing a little bit of weakness as far as the move to the downside because we're showing a little bit of demand, but that's probably this move here. So now we're looking for the move to the downside. Where could this thing go? First, let's look at the regular support and resistance levels. So the main levels are going to be this level right here is one level. Let's see, this is a good level, support and resistance. So we could come down to there. Also, let's mark a couple other levels here. There's this level. Let's see what that level is. So this is a good level. You got resistance here, and then kind of like support right here. And then one more little resistance level where we could see the market move to. I mean, support level, sorry. Because you had support here, a little bit of support there. So this could be a level. We could move down into this area. Now, that's the basic support and resistance on the chart. Where could our target be where we could move to? Okay, so we can move to these support and resistance levels, but let's look for our N wave. Our N wave is going to be, again, I use this. Let's go from this point to here and to there. So our N wave actually is going to go right to this support level down here. So we could see the market move down to that 328.6 level. That'll be a 1-to-1, which means this leg, I'm going to show you exactly what a 1-to-1 is. This will be easy to show you like this. See how long this leg is? That leg is right there. So let's move in on this. Show you real good. This is all we're measuring, a measured move. That's what it is called. So you see this leg right here. Well, we're saying now when the market moves down, it's going to move down the same distance, which would bring it there. If that's the case, right, then we bring this over, and you would see if we move from this point to there, that's the distance, which means these two legs will be equal, which this is just called a B equals C, D. In Ichimoku, this is called the N wave, right? And then also in Ichimoku, this is called the N target. Where are we? This is called the N value. All right. And then I already told you guys about this. This is the E value. And then so forth. We have an NT value, which would be somewhere in here. I can measure it, and then we have a V value, which would be close to the N value, somewhere in there. I'm only concerned with this value and this value. Usually the market moves to those values or this 2 level right here. You got to get through this 2 level. So if we drop down, that's where we first want to look at profit. So this is where you want to get into your trade also. I didn't mention this. I should have mentioned this from the start. I would look to be shorting this pretty soon. So how are we going to get into the short position? Here's what I would be looking at. So if I was going to short this, let's get this out. You could see we're boxed in here. So what I look at, first of all, we have a box here. So I think you may see a break up to the upside maybe, but I don't know. But what I like to see, I want to see a close outside of this box. Or you could even box it in here, and I want to see a close outside of that. As long as Tinkinson's aiming to the downside, we're going to see the market quite possibly move to the downside. So a break out of that level there, and you'll see the move to the downside, and we may get to our target levels. All right. And again, let's show our target levels so we can move on off of this. We can mark it. Let's mark it from here. You can mark it from here. We're going to put 2 target levels. This will be our 1-to-1 level. So that's going to be 330.4. That's going to be your target. That's where you want to shoot for. And then also you want to shoot to get through this level here. What is this level? You want to get through that level at about 407.9. So you break through here, you want to get to 407.9. You get through 407.9, then you're shooting for 330.4. All right. That's what I'm looking at. And I would be looking to short this now. Let's see how this candle ends in a little bit here. When this candle ends, then we'll be able to decide, because it gets 30 minutes before it ends. Probably not going to really know till the next candle, because we don't want to see the next candle close higher than this level. And even if it does, remember, we still have this zone here, resistance zone, where we can see the market push up to, and then we'll look to short. And again, our cloud is getting thicker, but we're still angling down on span A. As long as span A is angling to the downside, we're good. Once that starts rolling over, that's the problem. All right. And by then, we'll probably already broke this level. So you may see the market get up into this area. That's when you're going to have to be precautious, because you want to see what's happening with span A. All right. Chiku spans below price. TK crossovers bearish. You got gray skies. So it's a rainy day. It's a gloomy day. It's a day where the market is dropping to the downside. All right. So that's what I see for this. Let's move to the next. The next is CompUSD. Again, looking at this flat level here, I like to see if there's any divergences, because if there's a divergence here, then sometime the market is not going to get through this low, because what's happening is you're getting demand coming into the market. And there is a divergence, because if you look at this level here, then when we move up, you could see this is going to the upside. This is flat. All right. So therefore, it needs to violate this level. I think what I would wait for, let me see what kind of structure we got here. We don't have any wave yet as far as a P wave formation. And we're not going to get that either, because we double bottom here. So double bottom with divergence usually leads to the market moving to the upside. Ichimoku's not showing me anything good as far as maybe moving to the upside, because I still got angulation on my cloud, and then I got a drop on span A. All right, so that's worrisome for as far as thinking it might move higher. I want to see if it's going to hold here, then we'll see it break, and we'll start to break Kijinsen, and then we'll start to see the move higher. So you have this N wave structure still, that's showing the downside move. So then we got a little correction, then maybe that. All right, because if we were going to continue, here's how we would have continued. If we were going to continue this upside, because it started here, you had that N wave there. Then you had another N wave that died right here at the 2. It stopped at the 2 level, which is fluctuation. Couldn't get through the 2 level, then broke this level and came back and bottomed out down here. So therefore, we want to see actually almost becoming a head and shoulders, almost. But we want to see If this market violates this level, then it corrects at this level, then we go to the downside. If not, then watch for the violation of Kijinsen. All right. Once you break Kijinsen, then watch for the market to move a little higher. You got to break these structure levels to really start changing direction. All right. And the market pushed up to a level. I don't really hold these levels vital in a flat market. I call this flat because we double bottomed here. And we have that divergence, so maybe a little move higher. I don't know how high we'll move, but if we don't move higher, I'm looking for the break, the correction back at 179.22.7, then drop. That's where I trade it short, and this is where I trade it long. This level, if I'm above this level, I trade it long. If I'm below this level, I trade it short. But I don't trade it as soon as it goes below this level. I need this level to now become resistance. All right. This level needs to become resistance. It's now support. It needs to become resistance. Once it becomes resistance, we short it. We trade the market long at support, short at resistance. If you do opposite, then you're a breakout trader, and breakouts usually fail. So therefore, I don't see much happening yet. I want to see what's going to happen when we get to this level if the market continues to drop. If we get to this level, and we have this divergence, I'm going to look at price action, and I would look to take a move to the upside. And then as far as Ichimoku, we got everything bearish though. All right. And my move to the upside is not saying, hey, full blown move to the upside. I think we're just going to move higher, might move up to the Kijinsen because the Kijinsen is so flat. That's what you may see. You're not going to see a full blown, hey, we're going to the upside. We're breaking Kumo and everything. No, we're not talking like that yet. We need to see a lot of things happen before that. But this would mean we just quite possibly move maybe up from here to maybe up to Kijinsen here if Kijinsen stays flat. And then we start to see some kind of fluctuation in here. And then maybe we break out to the upside. But as far as we're angling to the downside like this, not happening. We got a crossover that's bearish, gray skies. Chiku span's inside this price here. That's why you're flat, your fluctuation. That's going to give you this ranging market. All right, because your Chiku span's inside of that price. But your TK crossover is bearish, then it bearish again. It crossed over full bullish and then bearish. So when you get too many crossovers, also, just think about that. You cross over here, then you cross over here. If you cross over again, that lets you know that you're flat. You're not breaking levels. Okay, so currently you are kind of like between this level here. You're currently trading like between this points here. All right, so if we hit here, I'd look for my next move. I would bounce off of this level, trade it up to this point, and then see if I can get to this level. And then at that point, it'd be all bets off. All right, and you could see what the market did, like it always does. Well, not like it always does, but like it likes to do a lot of times. You want to trade this? Well, then you need to mark your fractal levels. If you mark your fractal levels, you're not always going to get a trade at the fractal, but it's going to be one of your big trades because this is a S-wave trade in Ichimoku. I'll show you how that S-wave looks real quick. I've been talking about the same stuff all the time because basically I do the same thing in the market all the time. That's the S-wave right there. And then the market dropped. All right. And this is where you trade that S-wave trade. You trade it right there. It bounced off of this level right here. Come bouncing off of this zone right here. Moved up to that zone. And that's where you short. That's your S-wave trade. In Ichimoku, that is an S-wave. Okay. And that's where you catch that trade. But we're not talking about that now because we're flat here. So we're thinking maybe we're inside this area here. This is where we're trading for a little bit. We'll see what happens if we get more angulation and we violate this level. Then it'll be totally different. All right. Then we can start looking for that move to the downside and boom, down to the downside. Now, another thing that we could also notice, pay attention to this also. So you got your flat level here. I think we watch to see if we don't come up to these highs, because if we don't, then we may start to see a descending triangle pattern, which then eventually could break out to the downside because we came from the upside. And then you would see something like that. So watch those scenarios. I give you some scenarios and you just watch these things and see if something like that happens. And that gives you an opportunity to get into a trade. I can't tell you what the market's going to do. A lot of times we can hit some targets because the market likes to move to support and resistance levels and so forth. And we see those levels and we mark them. And then that's how we're able to see those things happen consistently in the market. Let's go to the next one, Dash USD. So Dash, I'm not really going to talk much about Dash. I don't want to waste time on any assets that is not really giving us much. Okay, you can see Dash is bouncing off of this low. Came off of this low a couple times. Let's see exactly how this thing looks. We don't want to, because we got a long session here. So here, and this is what I'm talking about, guys. Let me show you this. I really want to show you this, because this cumulative volume is like OBV volume, which is transactions basically. Okay, so what's happening here is you bottomed out here, but when you bottomed out right there, you had divergence coming in all along here. This was showing an increase in demand, and what happened? The market moved to the upside because you had that. It started to show you the smart money, which is the institutional buyers, and that's what this was. And that's why that happened at that support level right here. I always look for divergence at support levels or resistance levels. I want to see bullish or bearish divergence. I want to see bullish divergence here and bearish divergence up here. All right, and then I look to go short, or I look to go long. And then the other type of divergence I'm going to look for is hidden bullish or bearish divergence, which is a continuation divergence. So if I'm looking for hidden divergence, it's just a continuation divergence, which means, like, let me show you real quick if I can. I'll do another video about this divergence. Let's look at this, see if we can find one real quick. Well, no, I can't find one right now because I don't want to waste too much time. But that would show me, like, if I had a divergence where this was higher right here, but on my indicator it was much lower, then I know I'll probably bounce here and see the move to the upside. That would be hidden bullish. And then hidden bearish would be the opposite of that. All right, so where we are now, we're flat. We're kind of flat. Look at this level here. I think we're in between this level right here. And you can see Tinkins and Keatingson together like that, flat. I tell you to trade them when they're together like that, angling. I don't want you to trade it when they're together flat. When they're angling like this, look. This is when you want to trade it. Look at Tinkinson and Keatingson angling together, and they're so tight right here. You definitely trade that to the upside. That's momentum like crazy. Okay, but this, my friends, this is nothing. This is meaning we're flat. We're very flat. There's no momentum. I'm not really going to give you any type of trade to set up. I don't even like looking at my structure levels, which would be this fractal level right here, seeing if it bounced off of that, because these levels in a flat market, to me, I don't think they really matter a lot. All right, what's really matters to me in a flat market is going to be the upper and lower levels, not the mid levels. And I can show you how to trade a range in Ichimoku, but that's for another day. Ichimoku has range, so then we have to start using our time analysis to trade the range. All right, because we're going to trade the range with time. All right, to break out and know where the market's going to go back up or down. And that's all in my course, but I can show this, but not right now. All right, so with this Dash USD, I think we basically are flat. I wouldn't really trade it right now. I'd look for maybe when we get to this level or back down to this level. Now I'm not saying wait all the way to this level, but I don't really have anything with Ichimoku right now. We're flat, and it's showing you. Look at this cloud, flat as heck. Flat, flat, wide, wide, flat, flat. Okay? Everything is flat. And Chico Span's inside this price. Tings and Keatingson flat. Span A and B are flat. The market is flat. Doji Cat USD. Doji USD. I like to call this thing Doji Cat. But looks like this thing is trying to make a turn to the upside. But I didn't see any divergence down here. But that doesn't mean it's not. So I think we're still bearish. Look at the monster rejection. Look where it rejected off of Keatingson. I mean off of the top of the cloud. All right, so rejected off of that level. I would look to be short at this point. I would look to short this here. Now, if we can cover this rejection, well, then I'm totally wrong. I think we're still bearish. This move here, I don't think that's going to be. I think, like, if you see, we saw this major rejection. If we close below the rejection, then yes, we're going back to the downside. The thing that happened here is we double bottomed, right? So when you had a major candle like this, and it has a low like this, then watch watch for when the market comes back there. See if there's divergence at that point. Now there isn't really. And then now you got this high here. So this is going to be a point where you're going to watch to see what the market does at this level. Because sometime what's going to happen, guys, watch this. If the market doesn't close below this level, it's going to push up into this area. So watch to see when this candle closes shortly in 17 minutes, what we're going to get here. If we get something like this, sometime you're going to see stuff like this. The market trading up into here, trading up into these levels, and failing to break out of that area. All right, but if it breaks that area, I usually wait for the test and then the trade. All right, so I'll test this level. All right, when it breaks. Now this is a great rejection candle and the market is bearish, so we definitely want to be shorting this at this level. But if you're afraid to take this trade short, then you probably don't get the opportunity, because I don't think you break and come back. You could, but then I think we head back to the downside. But I do see where the bulls came in here, and you could see they're still strong, and that's this candle here. So the market is still bullish now. Short-term bullish, just this move, but this basic move is bearish. All right, and Ichimoku is bearish. Dark clouds, crossover is bearish still. You got a crossover that's bearish. Chikou span is hitting off of Kijinsen. That's very important. Let's go back over there. If it can't get above Kijinsen, then we're going to see the market drop again. So I'd be looking to short this. I know you guys are happy because you see a great move like this, but still, the market's still bearish. You just had this move just like here. You know, you guys probably got happy on this. And then look what happened. The market dropped back to the downside. It's going to look like probably the same thing here. All right, we're rejecting levels up in here for some reason. So let's see what this main level is that we're rejecting. So it's not this fractal, and we came to this high here. See this high? And then that high? We didn't quite get there, so let's mark this fractal and see what's happening there. That's the zone that we're hitting. So let's move over. That's the zone that we need to break to see this market continue hard to the upside, strong to the upside. Until you break like this level right here, and I think like if you push up there again, you better watch that it's not a resistance point and the market drops again. And when I'm talking about the market moving higher or lower, it doesn't mean that it's a full-blown trend to the upside. I'll tell you when I'm talking about a full-blown trend to the upside. I think we're still bearish because we didn't have anything that really set us off to show that this move is like a trend changing move. I need to see a higher low in order for me to start to think like that, right? So I need to see, I'm talking about shorting here, and then I would see this. If it can't come back to this low and it makes a low here and goes higher, then we started that new N wave structure and we made a higher low. Here was a low, then we make a higher low, then we're starting to see the market may possibly be moving higher. But until we see that, we need to stick with what we see happening here. Yes, we could guess the market. You could get excited and jump in here because you see some stuff happening and want to be a part of it. But that's not the way you trade. That's the way you could guess and gamble. But that's not the way you really trade. You need to see the structure of the market, understand the structure, understand what's happening. Just because of 1, 2, 3, 4 candles, that's going to change what happened in the past 50 candles. Come on, guys. You got to really understand the market structure here. Okay? And we failed to close above a couple other levels too. Let me mark those levels real quick. This level right here, we failed to close above right here. So that's my entry. I would enter at the bottom of this candle. And then I would worry about this. We haven't closed above this level. And then let me get rid of that. So we haven't closed above this level right here. This is a major structure level because since you can't close and above it, then you're flat. Look at how flat you are. That's where you are. You're in that box right there. Until you close above that box, then you need to wait till you see what happened about this level. So while you're here, you're not closing above that box. You're in this zone. You're in this range, and that's where the market's flattened out right now. All right, and we need to see a higher low in order to start seeing new directional change in the market. You had increased volume here. You had increased demand here, right? From this point to here. And that's where the market did this, but it still stayed with the longer term bias of the market. So you got the same thing happening here, but you still got the longer term. All right. So this is the level I would be looking to short this. All right. DLT USD. This is just as brand new. I can't even do observation with this with Ichimoku, so I'm going to take it off the chart. All right, so Ichimoku's off the chart. Let's look at some levels, see what we got going on. I only trade levels because levels will keep you safe. All right, because you always have something to fall back on to show you where the market is going to maybe pause to put your stop loss. So this is where we have this low here, and I'm going to make it into a zone because we have this candle wick. So this is a support zone. No divergence here. Then we see, yeah, this is so brand new. Not even honoring these levels yet. Okay, not even honoring that. We haven't broken this high. We're making lower highs. All right. So I think the market we're flat really, but this current move right here, you can see what it is. We're pushing up a little bit. So what I like to see is a breakout of this box. Close outside of that box, we may see the market move higher. Where could it move higher to? Let's do a little N wave on this. Let's do a small N wave on this thing. I don't know which one is higher, but it's close. So we'll see it move up into this area here if we close above this level. So we would be moving right back up to this support and resistance level, right up in here. Because this is it'll be what's that, 30.90. So if we close right here where we are, we're probably going to see the market push a little higher up into that area. That will create a new N wave here. And that's showing signs of the market moving higher. Now, in order to really move higher, we need to make an N wave that moves up into this level. Sure, we may not break this level right off because if we do, we push back like this. Now we're back in this V wave, and then we'll see the market push back higher again. And then at that point, we could break this level, and that's where we'll start to see this thing trending to the upside. Right now, this thing is flat, really. It's really flat, and I think that, you need to see it get through some certain levels, which would be the one that I put on the chart, right? You want to see it get through these levels. Other than that, it's really flat. You want to see it get through these levels here. Mark this real quick. Want to see the market get through these levels right here before you really say we're in a trend. There's no real true trend here. We're a little bit flat. So that's DLT USD, EOS USD. Put Ichimoku back on here. Where's Ichi? So we're very bearish, but we came to this. Okay, so I always mark these lows when I have a big candle like that. Mark those lows because they're going to be support levels. All right. And then the top of the candle is going to be resistance. So what you want to trade it like this is you want to have that zone. And when the market gets up to that level, you want to wait for the break. So you always mark these big candles. Mark these big candles that have excessive. Mark the low, the high. When you break that, you test it. The test is where you're going to trade. So trade that test. If it comes down here, test that level, trade it to the upside because that's support now. Now, if it violates that level, then we can see it test. Then we short right there. So these levels are major good levels for us. But let's see what's happening right now. So based off of Ichimoku, we are bearish. All right. TK crossover is bearish. Clouds are bearish. Chiku spans below price and price is below the cloud. I think we could push back up to this level right here. So we could push up into this area. We have, I'm not going to say major divergence because this candle's doing it all off. If we just were looking at this level right here, like this level and this level, then we would say we had divergence because that's going down and this is going up. So I'm not going to really call it divergence because this candle is throwing it all off because really it's like that. All right. And I usually don't count excessive candles. I don't count the low of those as far as looking for divergence and so forth. But that's what we got. I don't really see anything. I think this is still bearish to the downside, and I would look for a trade at this level right here. All right, that's my fractal level. We'll look for a bounce off of that level and continue to the downside. My cloud is nice and thin, angling to the downside. Everything's kind of angling to the downside, flattened out on Keynesian a little bit of flatness on your cloud, but I think you still see downside here. Now, don't think I'm saying you could still see it push up to this level, but I think that's where you see the market drop. And also, when you always get boxed in like this, box the market in so you can know what it's going to do. Usually where it breaks out is where it goes. So if it breaks out to the upside, I think we find resistance at this level here, this red level, and Keynesian. So we find resistance and we probably go back to the downside. All right. I'm not going to consider this a low than a higher low because I think we're still pushing down towards this level. All right. So that's what we see with EOS USD. ETC USD. Pretty much the same thing. This is bearish, but we got a thick cloud. You see some strength come into the market right here because you see some demand come in, but there's no kind of divergence here. So I'm not thinking that I don't think this is changing. I think it's bearish. It's going to stay bearish. But again, mark your levels here. Mark these levels because they become support and resistance levels. Look, see what I mean? See what I mean? Right there. Market came right down to that level, bounced off of it. All right, and started to move higher. But I don't think we're going anywhere. Let's mark this fractal level. So I think this is where we're looking to short the market. Now we're already rejecting this level. Okay, so I think we see the market move back to the downside. We do got a flat cloud here, but span A is rolling still down to angling to the downside. Until that thing rolls over, once you see it rolling up a little bit, then maybe we got a bottom. So maybe if we get this is what I'm looking for. At least that. Then you might start to see a roll up and then a change of direction if we continue to see divergence and increased demand coming into the market. But other than that, what I'm thinking would happen will be this. Basically, you get a trade at this level, take it to this point, and then see if you can violate, because this is the 2 level, right? This would be your 1, 2, this would be 3, and then we would shoot for 4. Where would that target be? Let's see what it is. So I find my target here. This would be start of my N wave, B wave, and then we would shoot for 1 to 1, which is going to give us a level at 22,078. All right, you need to get through this one level right here at 26,428. You want to look for a short in this area. All right. I use my chaos momentum oscillator, which when it turns red, I'll short the market. It does not fail me. Trust me, it does not fail me. And I'll take you guys through that. I'll give you a synopsis of the trade, back testing of it, and let you see how well it works. But that's what we're looking for. So we flattened out and bottomed here once already. I think we're going to be coming back off of that level because we got resistance here and we don't have any divergence. Okay. All right. So that's what I'm seeing there. Anything we need to be aware of. Let's see what the overall structure is real quick. So we could see we've been bearish since this point, pretty much since here, and pretty much bearish. Kind of like, yeah, really since this point, really bearish here. You've been to the downside since, really. You had a nice little push back up and then move down. Let's go big term here. Let's look at this big boy. This is the low, right? If we mark this high up here, oh, what did I mark? So we go. So if I'm looking at that, if I'm looking hard like that, this is not showing. Why are we not showing? Let's see if I can get this to show. So we would be 1, 2, 3. What is this? Oh, there we go. So let's move this down. So that 1 to 1 is right here. Now watch where it's going to be. Let's see where it is because I need to see where that is. My colors were getting me messed up. So the 1-to-1, where is that thing? Nah, we're not dropping that far. Something's off here. I think this is off. Because 1-to-1 now would be way down here. I don't think we get down there. Nope. Not seeing that. And that's long term. And the reason I did that was because I wanted to see where the big N wave was from this level. Where this looks like. Because that could, this could be the continuation of a move down. I don't think you get past this low here if you even went that far into the future. But based off of where we are now, let's just worry about what we got right here. All right. So our target again would be what I showed you. So let's mark that N wave here now. From here, 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 and then this will be our target. 1-to-1 at 21,963. Okay, and you need to get through this 2 level. All right, so let's move on. ETH USD. I don't know if I'm gonna make it through all these. There's too many here. ETH USD. Let's just run through these quick. Let's not get real deep on these because I don't want to give you another 2-hour video because I'm only an hour in and I still got probably halfway to go still. So what I'm thinking of is the market, first of all, box it in if we're trading inside candles. Because when we close outside the box, that's the way the market usually goes. All right. So if I think the market's going to at least, if we close below this level, we're still bearish. There's a little bit of demand coming into the market, but that's just this little move here. There's no major demand showing in this market. So the longer term move is this move right here, which is this downtrend. You got shorter uptrends here, which show the demand come in here, and coming in again. But I think you're going to see the market, even if we drop here or move higher. So if we move higher, look at it moving up to this level here. All right. So look for the market to push up to this level and then drop, or else we just close outside of this box and we continue to the downside. Where's our target's going to be? All right. So let's see where our target is going to be. 1, 2, 3. So if we short this, when you short this, look for a 1-to-1 target at 24.1502. That's where you're going to shoot for, this level right here. All right. But you need to get through this 2 level, which is going to be right there. You need to get through that level. And then you shoot for this end value. This is not an end wave, it's an end value. So you're going to shoot for that end target at that level. All right. And you could see the move. So let's just go from here. You could see the end waves. And that's what we're seeing, that end wave structure. All right, started to have a little P wave here, broke out of there, moving to the downside on the end wave structure. There's no change of direction here. There's no 1, 2, 3 reversal. Now it could be a small reversal. Let me show you. Small reversal maybe. It would have to come down and not break this level. Then you might see that, and you'd have to break this point. Now, don't think that when we break this, you got to worry about what's happening here. That's where you're going to bounce off of and probably see it move back to the downside. Our cloud is a little bit thick, but you got angulation on span A to the downside. So I don't really see this thing changing direction right yet. So mark this low here. This will be a level that we want to see the market might go to right here. This, let's mark it as a zone because we got a little bit of stuff here. So that's going to be a nice zone for us to look for the market to come back down into. Okay. So that's going to be ETH USD, filibuster, Fila USA, FIL USA. Put this on auto. We're very bearish. We're very bearish. There's no change right here. Now there is some divergence, big divergence. I may have spoke too soon. There is major divergence here. But again, divergence can last for a long time. Doesn't mean the market's going to change direction yet. All right. And then remember how I told you, watch these levels here off of these big wick candles like this. Okay, so I mark these candles because they're going to be levels, strong levels. We broke already. We may push back up to that level. So mark that level as a level that the market's going to find the test that we talked about. So we broke here. Now we're scribbling around here. We might test this level, then we short it again. Flat cloud, still angling down. If it starts to roll over, that'll be different. The major thing is that divergence. That divergence is scaring me. So where is a bottom on this? Let's find this bottom. If there's a low, that's lower. Let's go to a higher time frame. Let's go to the monthly first. So here's the low that we need to be concerned with. Let's see what this is. So this level right here. Let's put a 0 there and a wick there. This is where we need to be concerned. This is the low. And let's mark the all-time low area. Then let's go back to the daily. So that zone is right here. So dropping into this area here, we could see, because let's go back to the monthly. Let's see what this monthly is doing. Man, it's still strong to the downside. Let's go to the weekly. I'm trying to figure this thing out. If we're getting ready to see this change of direction. No divergence here. Still strong to the downside. But we're not going to see it first on the bigger time frame. But the thing that's a problem on the bigger time frame here on the weekly gives me a little bit of clue is that we're at the level pretty close. Look how this cloud is. You're not going to continue to go lower as this cloud keeps expanding and span B stays flat. And span A just keeps going to the downside. You're not going to get a cloud that's going to be like that, guys. Because eventually this would have to go or else this would have to roll over. And the divergence that we saw on the daily may signify that this area is a strong support level. This was that zone. This whole area was that zone off of the weekly, off of the monthly. So let's go back. Let's go back to the daily. And I still would be shorting this. Now, again, look at this level to short. You just closed outside of Tinkinson. Tinkinson going to be a resistance point also, where you could see the market drop to the downside. If we violate, so let's mark our levels. I'm going to go with the small wave here. So we could see the market push down to this area here, but that would take us past this zone we drew. So I don't really see it coming past that point, really, if based off of what we saw on the higher time frame with that big thick cloud on the monthly. All right, but see, and we're starting to flat. We're getting distance here. We're still flat here, but we're kind of starting to roll a little bit. So we'll see if this is a bottom. Best thing I could tell you is we're still bearish at this point, but I think we're seeing buyers coming into this market. We're starting to see institutional traders not down with this drop to the downside. A break below this level would be vital, but it would only send us closer to this support level. All right. So if you don't, I would probably just hang tight because we are inside of a box and I want to see what happens outside of the box. We're inside this box. We got a little rejection here. Are we going to break the upper side? And if we do, is this going to be a resistance point where we may see it drop again and then double bottom and then move to the upside? So at this point, I don't jump my guns right yet. So just be patient there. IOTA USD. Let's look at this thing. Take this off. Let's lower this. It's a flat market. Ichimoku's not helping me here. On these kind of markets, what I do basically is just trade support and resistance. I don't trade Ichimoku. I'll find the top and bottoms, find the major support and resistance levels and trade them. So I want to see what the market does if it pushes back to this level. Too many crossovers with the cloud. Look at the clouds flat. Look at the crossovers, crossover, crossover. Flat Kijinsen for a long time. This market is flat. I would be looking to buy it if it pushes back down here again. All right. So other than that, I don't see anything that I would talk about Ichimoku wise. Let's go with KSMUSD. It's a bearish market. There is some divergence coming into the market, as you can see, showing because this is still pushing to the downside. Now this is demand coming in. Now let's mark our levels again, because we got this candle is not super major like we have seen the others, but I want to mark it because that's going to be a support and resistance level. As you can see, it's already honoring that point, and we're getting divergence here, and then the market did move a little higher. Now we may push back down again and test that level again. So we're right at a good level to sell this thing. All right. So we're at a great level to sell it, but Ichimoku's terrible in this flat market. We're flat since this point, since this big candle, and we're trading inside this big candle since that point. In order for this to be like a true trend, we need to break outside of this. We're inside this rejection candle. We need to break above or break below these levels. And again, how do you trade those levels? I'm talking about when we break, test, and then trade. If we break, test, and then trade, or else we're going to trade it this way. Only ways you're going to trade this thing is up here and then short. All right. Or comes down here and then go long. But don't take the short at this point. Wait for the test and then short. People don't do that because they think they're missing the move. That's why they don't wait and be patient with this. We always think we're missing the move and we're not going to catch it. So we're a little bit flat. We're finding resistance at Kijinsen. We got a crossover that's bearish. Chikou span's inside price. So if Chikou span's inside price, this is a flat market. It's ranging. So therefore, I think if Kijinsen holds here, we ought to be looking for a short right now. And we should short down to this 241, 1237 area right here. So looking for a short here and push it back down to this area. All right. Now, when we get down to this area, if we still have this divergence and we double out down here, then I think we're going to see the market move higher. You'll probably see a thicker cloud at that point start to roll over. We don't have distance on Tenkan-sen and Kijinsen, but just the cloud itself showing you signs. Look at this cloud. Let's get this auto. Here's how I always tell you about you have a bottom. See if I can play this back a little bit real quick. Show you the bottom. You always know you have a bottom when you get a cloud that's getting fat and thick like this. Now watch how this cloud gets. Now look at that cloud. That's getting too thick. Okay, we don't know exactly where it's going to change, but now look at it. See how that's flattening out? That's flattening out on span B. Span B is flattening out. Span A is starting to roll over, but you got major distance. Big, thick cloud. That kind of lets me know I'm at a bottom. So I always mark these lows. I'll mark it as a bottom. Then I'll see if it's going to violate. And at this point, we see divergence, right? So you see that divergence coming into the market. Nice bullish divergence. So then we think the market's going to move to the upside, just catching the move to the upside. Look at the distance on Tenkan-sen and Kijinsen when it was like this, and it got even bigger. That's a big C-clamp, all right? So when you see that big C-clamp, you know you got a thick cloud. You have a bottom with Tenkan-sen and Kijinsen with big separation. You're pretty sure this is a bottom, all right? And look at this candle. So the market didn't really honor this candle real well. Let me see if it did. Let me just mark it. I hope this stuff is helping you guys. But look at this big candle right here. See this candle? Let's mark the top of it. Those are going to be support and resistance levels. Now we violated this one, see? And then we push up here. Now look what happened with the market. We kind of can know it's a bottom because look at that cloud. It was too thick. And look at the distance with Tenkan-sen, Kijinsen. These are good signs to know you are at a bottom. And if you come to a bottom that's already been tested and you see these things happening, or a top with the same thing happening but in reverse, then you should kind of like know that you found a bottom on the market or you found a top. and I don't like to call tops and bottoms, but when I see divergence with a support and resistance level with a thick cloud and big distance on Dickinson and Keynesian, I kind of know already what the market's going to do. Now, it could just range down here too also. So that's another thing. Doesn't mean it's always going to push back. It could just stay flat for a while. But in this case, it pushed all the way back up. See, you got your crossover and it pushed up, and that's what you had. So that's how you can always tell you got a bottom, and you shouldn't trade against that. That's a major, major sign for you guys to understand about the cloud and about Dickinson and Keynesian and about bottoms and stuff. All right, so that's something that you should really, really know. And so where we are now, we don't have that. We had it right here. We flattened out, and then we pushed up a little bit, and then we dropped. This is the drop right here. This is the drop right here. So we did find a bottom, pushed up. We had the divergence. So everything that we talk about really kind of happened on a smaller scale, right? So this was the divergence, all right, where you saw this pushing up, and then the market pushed up. But then this move here is a result right here, because we're ahead 26 periods. So this is what you see happening. All right. So now I'm looking to see if we push back to this level with this divergence. The cloud's not really signifying a change, but the cloud is flattening, but it's not thick and far apart. Neither is Dickinson and Keynesian. So therefore, this level of support and resistance here with the divergence, I want to see what happens at that point. But what I would look now is probably for a short right now to this point. I'd short it to there. And then at this point, I would look to see if we're going to get a break, a move higher, because we'll have this divergence kicking in. And we also could range down here for a little bit. Okay, so that's what I see with this. Let's move on. Link USD. Link USD, nice move to the upside. Broke fractal levels, crossovers bullish, got a future that's bright. We pulled back to a nice level. This is a beautiful chart right now. This is a chart that you should be in a trade long right now. Let me show you why. So we look for structure. So what happened down here was a P wave. So the market does this structure, right? Doing these N waves. Came down to this wave. Now, let me back it up a little bit. So on this wave, we weren't able to break anything. So we made a P wave. You'll find a P wave at the bottom of a move. All right, so that was a P wave structure here. You'll find it at the bottom or top. When you got it on a move down, it usually breaks it back up to the upside a lot of times, but it could break to the downside. So when we had that, here's what happened. Now watch this. This is like what the market likes to do a lot of. Mark this structure, mark your fractal structure. If it's a zone, mark it as a zone because you got a little wick right there. Look where the market broke structure. It first broke the P wave, right? So you had this P wave structure. Boom. P wave right there. It broke P wave, came back to structure, and then moved higher. If you knew this and saw this, you would be able to take this trade, but you would be trading Ichimoku and say, no, I'm below the cloud, blah, blah, blah. You had the signs that I talk about, guys. Look at this thick cloud. Look how thick that cloud is. You didn't have major distance here, so that wasn't real bad, but you had a flatten out here, and then you had like a P wave structure. See it? It's just a triangle, and then it's a symmetrical triangle in reality. And then you see this fractal zone where the market came back, broke. So now you have the new N wave starting. See? That's a V wave. We need to, if it's not going to continue, then it would break this low level here, but it failed to. So there at this point, what we talk about, we had a low and then a higher low. So we were at 1, 2, and we always trade at 3. You would have taken this trade right here, bullish engulfing. And then you've been in the profit. And here's how you would have found your target. So you would have looked for your target just like this. Go on 1, 2, 3, and it went to 1-to-1 right there, went a little bit higher than 1-to-1. So you could have counted on your 1-to-1, which is your end value. All right, but now where we are, it's doing the same structure, but this time it's coming off of this level. You would be long already. You should be long on this already. You should be long right now, right on this level. All right, so this candle just ended and a new candle just started actually. So I would be long right now with a stop below this level. All right, I would be long here. Now, the problem is the clouds are flattening out. So it's showing we don't have a lot of momentum, but this is a nice S-wave trade. I can only trade what I know and what I see happen. If it doesn't work, I just stick right back at it. But a lot of times this stuff works. So what I want to see is my chaos momentum oscillator give me a green candle. And that's where I definitely will go long. So if you're afraid to take this trade, what I like to do is take this trade because I'm minimizing my risk. If I wait, then I have to still have a technical stop loss level. So let's mark this S-wave trade. 1, 2, 3, 4. This is right there. Then that's where the trade is. It came back to this level right here. That's now a S-wave. And then we should see it move to the upside. Where's it going to? This is a nice market setup. All right, looks real good. So where's this going to go to? Or could it go to? 1. I can't get much cleaner than this chart right here. So let's look for the market to push up to this level at 33.64.215. But you need to get through the 2 level, which is going to be right here. So you need to get through that 2 level. That's going to be a point of issue. And also that right now we look kind of flat. So we may get into a kind of wave, a fluctuation wave pattern here. So we got to watch out for that. But I would be long on this already. And I would trade it to that levels that I'm talking about. And if I can violate those, then we're looking at a double top up here. All right, we'd be pushing up to this level. If we violate this, and we'll be so close to it, you're probably going to get to that point. So this is a nice long area. We always trade at the 3 level automatically. 1, 2, 3, and then we're shooting for 4. All right, so looking at this LTC, basically, guys, I'm going to give you the scenario that I see happening. Let me take this off so we could talk about what happened already. So we're in a move to the downside. We're still bearish. Your cloud is getting thicker, but it's still not rolling over like we talk about. So we talk about this rolling over. You see it's not rolling over yet. It's not barely. It's barely flat. But your upper cloud, your span B is flat. You have some distance here, but look at the distance you had here. So this distance was this here, this area here. And then you had this drop, which was this. And then now we're where we are. So the cloud structure is very important, helps you to understand what's happening with the market. So like I told you, if you see certain things setting up, you kind of know what's really happening. And then you don't really have divergence here. Okay, so I don't think we're at a low. I think we're testing this level. Get rid of that. What I think is happening here is we're continuing our N wave because now we have basically the 1, 2. We're at the top of a V wave. So we kind of broke this fractal level and we're looking for resistance right here to kick in, okay? And then look for the market to drop. Now, if the market can't violate this level here, then we'll see that higher high. Then we'll start to see the 1, 2, 3 reversal pattern. All right, but right now we're in the 1, 2, 3 N wave to the downside. So we have this V wave. So I'm still looking for the market to drop to the downside here. And at this point, let's take this from the long leg. Show where our targets are. So I think you should be looking for a short opportunity. And I think that the market will move down. And I say I think because I'm talking about based off of the structure and everything. We're going to be looking for this 103.43 level. That'll be our flat level for our N wave. our N value. I keep saying the N wave, but it's the N value. I remember there's a difference between the N wave and the N value. So that's going to be our level that we shoot for. Mark it right here. Show you pretty much right there. That's your N value. And that's where we'll shoot for. All right, let's get through this. We got a lot to cover and we don't have a lot of time. So Luna, USD, you could see pretty nice structure still, but then we violated. So we are in the big structure. The big picture shows this wave, right? The big picture shows this. So we're thinking the market still moves higher. But the immediate move is this correction here, which made a new wave, a new N wave, because we had this high and then a lower high and then lower lows. So now we went 1, 2, 3, and 4. So now we're on the second leg, right? So we're at 1, 2, 3, and 4. It would take us all the way down. Cloud is flat here. Spam A tried to roll over, but it's not that thick of a cloud, but it was kind of thick, but not real thick. But here's what it's looking like. Here was that first leg. Let's see how it measured out. All right, so you will go here, and then here would be your target would be right here, this N value. That would be where your N value was. So you would take your trade up here in this area, and then look where the market went to. It went a little lower, but that's where it kind of honored, right? So now we're looking for the same thing. So we're going to go from this high. We're going to go down to here. And we're going to go here. So just so you guys know, I'm going 1, 2, 3, and then I'm shooting for this level. So 1, 2, 3, and then we shoot for N value right here at 52.2658. That's going to be your N value target. So I think we look for that level if the market decides to break lower. Now, that's the immediate trend, but the longer term trend is bullish. So I don't think we're going to violate this longer term trend right yet. So I think, like right at this point, I don't think that the market's going to violate this level here. If we violate this level here, then we'll start shooting for this. So here's what you need to think about. Let's take this off. So this is our N value. That's where we're going to be looking for the market to move down to if we violate. But we have to violate this 2 level. All right, because we have 1, 2, 3, and then this was 4, but then we went 1. Now this is 2, and then 3, and then we see where this goes. So this drops a little bit. Say we get strength at the cloud. We find support, and then the market moves higher. We made a higher low. All right, and then we're not going to see that move to the downside. So we won't see much of a drop at that point. But now, if you box this in, so like I like to box this in. So we're inside of one candle. Let's do it the other way. We're inside of one candle, but we could call this inside of it. So really, we're inside of this candle, this one big candle. If you break to the upside and close above Kijinsen, this market's moving back higher. All right, but if not, we could drop down anywhere in here, down to the cloud. We could see this drop down and then continue to move higher. It's really hard to tell with this one. It's bullish, and I wouldn't really trade against it. I'm saying that the drop is going to break through this level. If it breaks through, we need to violate this level before we really consider this a bearish market. All right, because it's a bullish market at this point. We're above the cloud. Everything's bullish. Chiku span's even, well, it's kind of like inside the price. So I don't want to, hopefully we don't see like a P wave, because that may take us to the downside. But at this point, we're still bullish, but I would wait for the market to break out of one of these levels. So you can tighten it up here, and then now you can see you're inside of really these 2 candles. And then wherever you break out, that's probably the way the market goes. So if it breaks out to the downside, it still needs to break this low before it's a full-blown starting to trend to the downside fully. We're really flat, so we don't have a lot of momentum to the upside. So if we break this Kijinsen right here, that's when we think we would see the market move back up to the upside. All right, and then we'll start shooting for targets. But at this point, we need to break outside of this box. So the way you break is probably the way we're going to go. Okay. And definitely if you break above Kijinsen, I'd look to take that trade long. I try to watch for profit up in this area. All right, because we may double top and then flatten out again and see the market drop. Because it's showing signs of weakness just by having this big thick cloud and flat level like this and hitting this top here. It's starting to show signs of weakness. You see supply coming into the market right here. So we're losing some of this demand that we talked about. And the thing about it is, the green is the trend, and the red is the correction right now at this point. So this is the trend, and then the correction. We didn't even see the correction, right? We didn't see it. So what is happening with this market? We'll see what's happening. All right, so let's move to MATIC USD. MATIC USD, same thing. It's pretty much like the same thing, but it's a bullish market, and it's corrected a little bit. So maybe this is and it corrected down to Kijinsen. We got a crossover that's bearish. Our cloud's still bullish. Chikou span is like just inside of price here. We may be flattening out here. So my thing is, box this in again. The way that it breaks is probably the way it goes. And I can't look at every pair and say, oh, there's something happening on every single pair I look at. Because really, there's nothing really happening here. I want to see a close above this level. Then I think we're shooting for the upside. All right, and if I do that, say the market doesn't drop any lower than this, I could tell you where our target would be if we do close above. So if we break outside of this box and don't close any lower, then we're going to shoot for this 2.7510 level. All right, that'll be your 1-to-1. That'll be your end value. And then you want to shoot for this high up here. That'll be your double top. All right, because we're coming off of this correction, it looks like, because this was what you had. All right, so here's how you can also tell that the market's getting weak. All right, I like to look at this right here. So watch this. You've got the market trending higher, but look at your cumulative volume trending lower. That's showing that this is showing right here strength, but not true strength, because this is showing me that there's supply coming into the market, and then it dropped off, and you can see what happened. And that's why I look at that. And then this was the correction. All right, and pretty much this whole thing. So this is where the weakness really started. You could see the decline showing weakness here, but then it flattened out and then it dropped. All right, and so now here, I think my thing here now would be this level and this level. If we could close outside of the box to the upside, I think we will attack this point. If we can't close outside of the box to the upside and we close to the downside, then we're probably shooting for the cloud level. Then we may see a Kumo breakout. We might not have our twist at that time. Chikou span will be below price, but to have a full-blown trend to the downside, we need some things to happen. Chikou span right here needs to break Kijinsen. It did here, and you could see how the market was, but it went back. We need that thing to break. It broke a little bit here, but we need that to break and stay below, and then we're in a full-blown trend to the downside. So I boxed this in, and again, I showed you where the target would be if we break to the upside. If we break to the downside, then I want to stand fast. Let's look at Neo. I hope you guys could bear with me. I'm getting down. I'm going to be faster here. It's really tough because I got a lot of pair to look at, and we are very bearish on this thing. All right, there's no signs of changing anything. Well, actually, there is some divergence, as you could see. So let's really see this. Here's the low right here. See, we're honoring that. And then here's this high, this big candle. We kind of honoring that level with some divergence too. So my thing here now would be what I would wait for. Our cloud is thick, but not that thick, and it's flattening out though, so there's no momentum. There's no momentum with Kijinsen, no momentum with Tenkan-sen. We're below price with Chikou span, so I think we're like in this box that I just drew. So we bounced off of this level once. Now my thing here is I really like to trade the direction that we're in, so I would be looking to short this. Now I would change my bias if we close above Kijinsen. I'd look to short it right here, and I want to get through this level, but with this divergence, I just don't see that happening. So based off of just looking at Ichimoku, I have to tell you that we are bearish and we're bouncing here looking for a downside move. My whole thought in knowing the market and looking at divergence and seeing support and resistance levels would be for me not to force this trade and wait. And I would wait to see if we do attack this level again. I want to wait for the break. So I would wait, because I'm telling you to take a trade here short, but we only have this much space, because I think like this support, this divergence is going to kick in, and then I think we're going to see the market move higher. If the market fails to drop any lower and breaks Kijinsen right here, then I would just wait, okay? Because I think that's what's showing you this divergence right here. Because I don't have an area to get into the trade if that happens, all right? And I really don't trade just because we broke above Kijinsen or Tinkinson. That's just starting to define the change of direction. Because then now what we would wait for is we would wait for to see how far it breaks, right? So if it breaks really well, then we could mark structure levels and see if it pulls back to those levels, and then we can get long, all right, at that point. All right, and then you may see that span A is rolling over, span B will be flat, and then you could start to see Chiku span needs to get through Kijinsen right here. And then we'll have a nice move to the upside. Until all that, we're just flat down here. We don't know what's going to happen. We may see a little bit of short move to the downside. If we violate this level here, let it go, wait for the correction back, and then short that thing. Okay? So don't force any trades. Next one, let's run to the next one. OMG USD. OMG, it's really flat. It's pretty much like the same thing. I'm not going to get lost in all these pair that aren't really doing a lot right now, but you could see how this started to break. Now this almost is really doing what I was talking about on the last pair. All right, I had to open it up because it's a little bit. So here's that support from this big candle, and I'm going to put this level. And then you could see I had a support and resistance level here. We violated it. I'm going to get rid of that for now. Actually, we could leave that because we may push back up to there. So we have like a resistance zone. Remember on this, on what I just talked about, right, on NEO. So I'm saying if NEO breaks the Kijinsen here, well, look what OMG did. It broke the Kijinsen, so now it's attacking this upper level. And what did it have with it when it broke the Kijinsen? So we were kind of, let's say we were flat, right? But we had demand coming into the market. Look at that. And then look what's happening with the market. And then look, you broke Kijinsen, right? Chiku span broke above price. That's a good thing. Then we want to see it break Kijinsen. That's going to be even better. You're kind of flat on Tinkinson and Kijinsen, so that means you have a little bit of not a lot of momentum at the moment, and your cloud is thin and flat. Okay, so the market has flattened out in this little area. So we do want to see this move continue. That would be good, but I wouldn't take a trade. What I wait for is, again, these structure levels when we violate them. So if this continues higher, we may find resistance in this area here. All right, and then it may drop back down. That's when you're going to get back to your structure level. Boom. Then you see the market move higher. That's when you take the trade here, or you wait for the Kumo breakout. Kumo breakout gets you on an extended move. But if that happens, what do we have? We have an N wave. Once we get that move happen, we can define where our target levels will be and so forth, right? But until then, the market's not really doing much. So no need to force anything, because you're not going to miss anything, because you know what to look for, really. Sands USD. Sands looks good. It's bearish. Not a lot of momentum in this thing right now. And here's the level where we're bearish, so I'm looking for it to push back up to this point. All right. And Kijinsen's flat. Tinkinson's aiming to the downside a little bit. You got a flat cloud, but it's still aiming to the downside on span A. So I'd like to see if it could push back up to this level. But if not, kind of box this in and see where it breaks out. All right. And so I'll wait for a red candle and then I'll short this if it doesn't go any higher than this. If it goes higher up to this level, I'll look for price action at this level and then trade. Because when we're looking for our short, we trade on the red candles. We trade short on the red candles. So I'm going to show you how that would work. So we're using what we call the chaos momentum oscillator. It's basically really Williams percent R, but it's set at a 5 period. It's basically the same thing, but we have a little bit of a smoothing effect to it. Let's look for a good area here. So we're looking to, if you're looking at the market here, right? So we want to be long. We got the market break above the cloud, and then we pull back. So we would lose this trade. We would, every time we turn green now, we're going to take a trade. So I haven't planned this out, so I'm just showing you. We would take a trade there. We would have lost that trade. But then we take this trade here. Because we're above the cloud, we take long trades when we get the green signal. So once you get red and then gray, gray shows no momentum. Red is bearish momentum. Green is bullish momentum. So you would take that trade. Now we got a change here, so we would take this trade. Then we get another change here. We would take this. Depending on where your stop loss was, this would be could be a winner or a loser. All right. Then we would take this trade long. That'd be a winning trade. We would take this trade long. This would be a winning trade because you're definitely going to have your stop loss below this candle. At least that's the minimum. But we want to be below Keatonson. We would take this long because we got a red between and we make profit. We would take this long, but this would be part of this move still. So we would wait to take this one. And then if we took that trade, I think we're not going to make profit because this came down and spiked us. All right. And this would have been the same thing. That would have been the same part of that move. And then we're going to take this. That's going to be a losing trade again. And then this is going to be a winning trade. Then you're going to look for a long. This thing spikes a little bit. You get a long there. That's a winning trade. Then you're going to go long here. That would be a winning trade. All right. And then now the market makes a Kumo breakout. So now you're going to trade red. All right. So this is red here. Not much of a trade, not good. I call that a losing trade. We'll take a trade here. We make some profit. We're going to take a trade here. Not much profit, but we're going to make some profit because it never will come back and stop us out when we make profit. All right. And then we're going to take another trade here. All right. And I'm just marking them real quick where I see we're below the cloud or whatever. And I'm taking a short here. Now, the reason I'm saying short is because I stay bearish until we break the cloud. I stay bullish until we break the cloud. All right. So therefore, that's what I was showing you. And this one wasn't trending so well. It's kind of spiky, this SANS USD. So I'll show you on another pair. Remove this drawing. And then let's get back to business. All right. We want to get this thing going. So we said we were looking at this level for the market to come to and bounce. And this really is a nice, real good level for the market to pull back to and then short. All right, I don't see any, I can't tell any types of divergence or anything at this point. We're still bearish. Chiku span is below price. TK crossover is bearish. Your cloud is bearish and it's flat a little bit. And we're still rolling to the downside. All right. If this stays flat and this goes too far, then we're going to call this a bottom if we can't violate it and this gets too thick. If Tinkinson keeps dropping and this stays flat, if it gets too far, then we know what's happening. So where could this thing go? I can't really tell you where it could go now because I don't know if this is done. Let's say it is. So let's see where to mark this. First of all, we had an N wave here, right? Let's see if it played out properly. So we're going to mark it. See if it played out properly. Boom. 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 Broke the N level. So that would be nice. We made it to our target and didn't quite get to the next target. So now we would go for the next one, which would be where we are now. So we will go 1. I think this is the lowest one. Yeah. And then we went to this high right here. So the 1-to-1 would be right here. So if this market doesn't pull back up to here, if it continues to drop to the downside, then it's going to look to push out to 0.1827. All right. That'll be your N wave. That'll be your N value. Sorry. but you need to break this 2 level also, and that's going to take you at about 0.618, which is about 0.2332. All right, so you need to get through this 2 level so that you could get to the end value. And if you break below this candle here, I think that's where you're going to see it market move. If not, we push up into here and then we push back down. Once you violate Kijinsen, then look for the market to start a new N wave to the upside. So you want to see that higher low. And then you can start realizing that the market may be changing a little bit of direction. All right, so that's what we got there. Let's get it going. Get rid of that. Let's go to Sol USD. I'm almost getting done. So a couple levels I want to look at on this. Look at this level. So we're kind of stuck here. This is where we are. So I wasn't sure if we were going to pull back to this level. And I believe I talked about this last week. I wasn't sure we would get back this far, but I thought we had a nice zone here, all right, to short the market. And here it is. So this is where we should be looking for a short opportunity right now. Not really any a little bit of divergence, but not super strong. Where's the support level here? So see, we can move a little bit lower. I think we can push down into this area, down here at about 124.99. So this was where I was looking for short. You had the rejection candle, so you wanted to be short here. So you wanted to be short under that level and push down to here. Now your N wave, you had an N wave here that went 1, 2, 3, and that took you past the 1-to-1. So you made your profit and almost took you, well, went to 1-to-1, and you would have made your profit. So let's see where this is going to go. So now where we are is 1, 2, and if the market doesn't go any higher, this is where we are. So we'd be shooting for this 106.48. All right, so I'm thinking short at this point, 106.48. You need to get through this 2 level, which would be support here. So if you can't get through that 2 level, which is a strong support level, all right, major support, then I don't know if we hit our end value, and we will start to see if we have any divergence at that point. All right, the cloud's getting a little bit thick. Is that span B rolling over? I mean, is span A rolling over? Because span B is flat a little bit. So that's what we want to see. You could see this is nice structure. Looks just like pretty much the other ones I've shown you. You could see this N wave values. And that's what we would be looking for. You got nice N waves in the market. And that's what you want to see. And that's how the markets move, period. Unless you have fluctuation, which would be a Y. So you're going to always have an N wave, always. Unless the market gives you fluctuation, then you're going to have either a Y wave or a P wave. More likely a P wave than a Y wave. All right, so you'll have that P wave. And the Y wave is going to be a market that looks like that. All right. And you're not going to see that a lot. A P wave is going to be a market that looks like that. So that's a symmetrical triangle, basically. All right. So that's the waves. And then the S wave is just, it's supposedly fluctuation, but it's really, to me, it's not, because it continues to move to the downside. And you had an S wave right here, right? You kind of missed your level, but it's still an S wave. And then now we're going to the downside. All right, that's what I'm seeing there. I know you guys probably have a hard time watching a video this long, so I'm trying to figure a way to make this a little bit shorter, I can't cover all these pairs because I know you guys really can't watch a video that's this long probably. And I'll try to mark it out chapter wise, but I see this on sushi here. Love this. The way I just look, I can look at this real quick and see what's going on here. So see this level? That's where we pulled back to. This is a nice S-wave trade. I think last week we talked about this, and we didn't make much ground since last week, because we were here a few days ago. Back here, we were right at this level, I believe. And then we pushed a little higher. Our crossover is bearish at this point still. Now our future went back to bearish. So I like this level for it to push higher, but I want to see it push off of this level and get above Kijinsen. All right, so I'm not really in tune with a trade. Now, if we violate, then I would trade the cloud breakout. All right, So if we violate this low, we're going to close below the cloud. You got a crossover that's bearish. Your future just turned dark again. So your cloud's dark again. So at this point, I would look for, watch to see if we break through the cloud, because that'll take you through this level. If not, then we already started a new N wave to the upside, right? This is the N wave to the upside. Basically 1, 2, 3. And then I'm looking at it pushing up, thinking we get through that level. That's a big move, but if not, then we're going to see a reversal, which is going to look like this. 1, 2, 3, and then if we violate this level, then that's when you see this. And then I think we might find support here, and we'll look to see if there's any divergences or so forth. All right, we're getting a little flat though. The cloud thickened out. The cloud got very thick. See how thick it is? That lets you find that bottom. You knew you were at a bottom again. See, very thick cloud, got the bottom. Look what happened in the market. And at that point, did you have divergence? I don't think you had divergence on this one. But again, guys, the thick cloud is a sign. There was no divergence on this one either. But the thick cloud, and again, we weren't that far from Tinkerson Kijinsen. They weren't that far apart. But that thick cloud was a big sign. And when we flattened out, for sure, it was a good sign. All right. And I don't say trade it, but I definitely tell you don't trade like against it. Now I trade it when I'm trading just the regular. If I look at the market and I kind of can understand what's happening, I'll take a trade sometime there. Now, a lot of times it could also flatten out here because this is another P wave. It's a small P wave. Because when you get to these bottoms, you get these P waves. See this? See that P wave structure? Came down, got to the bottom, and it made this thick cloud, and then it broke the P wave, see? And then that's where you realize the market's going to move to the upside. Hopefully you guys see that. Hopefully you start looking for that. So when you get down here, you see this P wave. You also see the cloud. You also see Kijinsen, the cloud so thick. But you also see Tinkerson and Kijinsen get real far apart. Now, they weren't super far apart at this point. But when you saw that P wave and you kind of like, I call this a bottom out because I look straight here and it never closed below that level. All right. But really, if you go from the lows, you got a P wave because you got that triangle pattern, which is basically a symmetrical triangle. And then we broke higher, came back down, touched the top of the P wave, and then we looked to move higher. If we fell, then we're going to go back to the downside and double bottom down here. But that's what I see happening to this market right now. Let's move on. TRX USD. TRX USD very strong to the downside. No bearish, nothing bearish about. I mean, nothing bullish about this, and no divergence. So we have angulation to the downside. We flatten out with Kijinsen. The cloud's nice, not super thick. We want to see it looking like that, and we're bearish. So I don't think we're going to get back to this level because this is my level to trade. And I would mark this as a zone. So I would look for the market to pull here for me to trade. Other than that, we may be bouncing on Tinkerson. So if we are, then let's see this. I don't see any divergence. I do see some demand coming into the market, but that's just this move right here. So watch to see if it could push back up into this area or to Kijinsen. But if not, box this in because when it breaks out of this box, that's the way it's probably going to go. So if it breaks lower, then you know you can take that trade to the downside. Right now, you're inside the TK zone. All right, you're inside your Tinkerson Kijinsen zone. Right here, Kijinsen, Tinkerson, you're inside that zone. And you want to break out of it. If you break out of it to the downside, make sure you get through this level. Then you continue. If you do break out of it, here's where your targets are going to be. So if we break to the downside right now, if this doesn't go any higher, then our target is going to be, I'm going to go from the structure here. We want to go, let's go from here actually, because we pulled and then we pulled. Let's move this. Let's go here. So we're going to shoot for 0.051870. That's going to be your end value. That's where you're going to shoot for. But again, you got to get through that too. Remember, you always got to get through that. And I'm not going to keep repeating that. Flat cloud up here. Started to get thick. Then we got the angulation. If you don't get that angulation, if you get this other span A rolling up, then you know you found a bottom right here. But you didn't see that. You kept seeing that happen. All right, so signs to look for with Ichimoku. And crypto traders, if you're trading on different default settings, I'm not sure how. I think you'll see the same thing. I can't really tell you because I don't really follow those settings. I follow these settings no matter what. All right, the default settings. And what I'm showing you is default settings, and the default settings work for me. Uni USD, a little bit flat. Let's not talk about this one too much because it's just flat. Let's see if we push back to here. And we're flat here. You could see the top of the cloud is flat. You kind of like, here's where you are. You're kind of like here. You don't want a cloud like that. That means the market's flat. All right. Chiku span's inside of this price right here. You crossed over once, you crossed over again. You don't want to see that. So this market's flat. I would look for it to come back down to this level and then maybe trade to the upside. But right now, there's nothing major with this thing. I would just relax on it, chill. And no divergence either. All right. Showing a little bit of demand coming in, but that's just this move here. So I don't really love this right now. I'd look at this level for it to come down to and then maybe trade. I trade these upper and lower levels at this point. So VET-USD. VET-USD is very bearish still. No divergence. We do have these lows though. And we don't have divergence at this low. So we're starting to see some demand come in, but I think we may see it push back down again. You bounced off of this fractal level, all right? So you pushed down, pushed up to the level. So you broke right here and pushed back up to it. And now you're starting to move back to the downside. If we get a 1, 2, 3 reversal, it means that we don't get lower than this. So I would box this. I would already be short on this if I was going to short because I'm going to minimize my loss if I do. And if it closes above Kijisen, I'm done. All right. But if it can't close above Kijisen, it's going to push back down to this level maybe. And then we may see it reverse. But there's no divergence. So it could still continue this trend to the downside. I just see these big wick candles as a lot of support. All right. And you can mark them anywhere and start to see how these levels hold out for you. All right. So until we violate this low, I'm trying to see if this is going to be a main level where the market fails. But with this angulation and everything, it looks good. I can see still movement to the downside. So I catch my short in this area and I don't short it down here. So if I'm late with the trade, I don't trade it. So I just wait, catch it up here and then short, right? So that's how I would trade it. I would stay with this trend, which is bearish. Everything's bearish. The only way we're going to violate is if we start violating structure and have a higher low. We don't have that yet. So therefore, stay with the bearish market. All right. Let's move on to XLM USD. Again, another flat one. I'm not going to really discuss this because it's flat. But it does have divergence, which is major. So here's your low. And then you came to this level and then you pushed off. Let's make this into a zone because we have that low and then we have where the market never closed below. So we make it into a zone. The market pushes back into this zone. You'll have divergence. I would look for a long trade. Let me stay with Ichimoku. I'm telling you to look for a long trade. You're below the cloud. So with Ichimoku, you would be bearish. But guys, with this divergence and this support, you're probably going to get a push up to the upper level. Maybe you don't break this point because that's where you're sitting inside of. But look where the market came back to when it corrects. Came back to this fractal level. See this fractal level right here? The market dropped, came back to it once, came back to it twice, kind of missed it here. So if we bounce down here, then look for it to push up to this fractal level. Okay. So these levels are vital. So at this point, I don't have anything really. XRM USD. Starting to make a little bit of a move. Again, mark this low. See what this candle is. We had divergence. See that divergence? This is flat and this is diverging. Here's the divergence. You're flat here and you were divergent. So you showed incoming demand into the market. And what happened? The market moved higher. So I think we may get a pause here or a correction. Let's see what we get. We get some kind of flag pattern or whatever, and then see if we can push the market higher. I'm not too sure what's happening right now. And the reason I'm not sure is because we did break this structure here. We didn't come back to it all the way, but we came back to this structure right here. So see that structure level right here? We broke it, came back to it, and then we moved higher. But then we broke it again and came back to this level. So I don't know if we're starting to get like, I don't know what's starting to happen with the market right here. All right. So we'll see. I want to see what happens if we're going to break out of the cloud. If we did break the cloud, I would take that Kumo breakout. All right. So I like to box these in and then trade outside the box. So a close outside the box with a Kumo break, I take that long. But again, the market's a little bit flat. So be careful of that. So we got 3 more to go. XRP USD. XRP, very bearish still. I don't see anything changing yet, but we do have some strong divergence. So that may be the thing. See this divergence? And we're kind of, let's say we're flat. We mark a level. Mark this level. There you are. So you got to cross over here, thin cloud, flat cloud, rolled over, and then we're sitting here. So we're sitting here. Let's see if it pushes back here again. If it does, and we still have this divergence, I would, again, another long opportunity if you ask me. But if it violates this low here, then we're going to see it continue to the downside. We are bearish, but we're showing signs of strength coming into the market. All right. So therefore, we may be at a bottom here because we flattened out here. All right. But again, we could push lower. We could push all the way down to here. We could push even farther than that. But where's the main levels? Let's see where the main level is where this market could honor. All right. So here's this level. And here's this level. So we could push to those levels, but I don't see that happening. All right, I really don't. But I mean, I could be wrong. We are very bearish. A little bit of distance here. We're flat here. We just flatten out. Maybe we drop even more. But I want to see if this market tests this level again and fails to violate with this increased demand. I'm going to look for a long opportunity. Now, I'm not saying this is a full-blown trend. Remember, when I say long, that means I'm going to make some profit by taking the market to the upside, but not necessarily saying that we're going to get this, you know, something like that. But saying I can get a move maybe from here, Kensington, up to the Tupper Cloud or wherever. Okay. So XRP is still bearish, showing signs of recovery maybe. Let me look at the weekly on this. Oh, it's flattening out and it's starting to get into a P wave. It's in a P wave, a big P wave. All right, so let me hide Ichimoku real quick. Show you this P wave. So here's the P wave structure again. This is a bigger one. And basically, again, it's a symmetrical triangle, really. So you're inside this P wave, this big P wave on the weekly. So when you see that, mark your levels good and you could play these levels. All right. So you could bounce off of the top, bounce off of the bottom, bounce off of the top. But then when we break, that's when the trend starts. So we're in a nice P wave here. What really happens a lot of times is that P wave looks just like this. So you might get an extended move and come up like that. A lot of people look at that. That would look like a flag pattern, right? Or a pennant. But that's your P wave in Ichimoku. So that's what you got on the weekly. So that's what we have. So back to the daily. That's the levels. All right, those are your levels. And you may be able to mark it a little better than I did. But those are the levels you bounce on, as you see. So we may be coming back down to this point, this low. Let's go to XTZ USD and then ZEC, Zcash, right? Let's put Ichimoku back. Flat market, very flat. You could see this level here. So no need to really talk about this. We haven't even violated this point, so I'm not even thinking about this point yet. So we're flat here, got 1 crossover, 2 crossover, 3 crossover, 4 crossover, 5 crossover. Clouds keep crossing over. This market is very flat, and it's basically getting into a descending triangle pattern. All right. And this is flat. There's divergence. So we may get down here, bounce and then break. I don't do anything right now. I would do something down here though. I wouldn't do anything right here because I don't know if the market's going to pull back down to here or just go continue to the upside. All right. So I'd wait for this level to come, market to come back to this level, and then I would trade long. But again, I'm breaking Ichimoku rules, but I'm looking at market structure and what's coming into the market and support and resistance. And you'll find like, if you get a crossover below the cloud, it's a weak crossover. I mean, it's a weak signal, but it's still the signs of a bullish market. And then Chiku span breaking Kijinsen right here. And then we're inside of price. But if Kijinsen breaks, if Chiku span breaks Kijinsen, that's a strong sign. All right. And sometimes the market's still going to be below the cloud, but you got all these crossovers. So you know you're not trending. So if you're not trending, then when you get to this level, then a possible bounce to the upside because you're flat or you're in a wave formation or a triangle formation. All right, so that's that. One more pair and then we are done. The last one, it's right here. All right, this Zcash, very flat market, very thick cloud, a lot of divergence coming into the market, showing a lot of strength. So what you want to look at is this, box this thing in. A close outside of the box is probably where you're going to see the market move to the upside. If it can't close outside of the box, it won't close outside of Kijinsen. So you're in trading inside of this one candle so far. It was a rejection down here. What's the major level here? Why is it doing this? A little bit of a rejection here. I don't see any major structure levels here. Let's move this up to this level because you got this right here. And then you also have this. All right, right here. So good levels. We reject it here. We may push up again. We're bullish crossover. Future's still dark, but you could tell the market's flat on the weekly time frame. Then go to the daily. We're very flat. But this thick cloud, if it starts rolling up a little bit, we'll see that breakout to the upside. All right. But we still have a bearish crossover. Okay, so this is flat. I would box it in, and then I'd look to see what it's going to do at that point. Now, we could all of a sudden see the bears come back into this thing and drop this below the box. All right. But you got major support at these levels. So that's what I see. Hopefully this stuff is helping you guys out. This was a long session, man. So we got to find a way to either be live or we're going to be shorter because we can't cover all these pairs all the time like this. Because I think people will lose interest watching the video this long. But I want to be able to cover your stuff, so it'd probably be best to be live most of the time. But I'm not going live till I'm sure that it's what people want to see. It's what people are going to attend. I'm not going to go live for 5 people or so forth like that. So we need about 100 people. All right, because I can pull 100 people in a regular session on a webinar, so we should be able to pull more than that from YouTube. And if we can't, then we don't want to just be live. We want to just continue to do recordings. But hopefully, guys, this is helping you out. Again, I want people to understand I am not an Ichimoku trader. I am a technical analysis trader. I trade the markets. Ichimoku happens to be one of my tools. All right. But I have more than one tool. I don't fight the market with just one tool. All right. You have to know how to, you can't be in a battle and only have one strategy. You can't be in a war and only have one type of a gun. So you go to a war and you have just handguns. You're done. All right. You can't fight any other way. So you can't be in a football game or a basketball game and only have one play. All right. You have to have more than one thing in your arsenal. And Ichimoku happens to be one thing in my arsenal. But I have a whole bunch of other stuff in my arsenal. And I'm showing you some of it as we talk about Ichimoku. I could take Ichimoku off the chart and still talk about the market structure, the fractals, the support and resistance levels, the supply and demand, the divergences, and so forth. All right. So that's major. So hopefully this is helping you guys out. And let me know if you like this. Let me know if it's too long for you. Let me know if you have any ideas, anything that you think I should do, anything you want to see me do, and anything that we could do to make it more interesting and make it so that it's not this long and you have to be able to sit here to watch a video. You want to see what you want to see and so forth. All right, guys. So hopefully it's helping you out. And until next time, have a great one. God bless. So long.